risk off and you're in to buy emerging markets equities. Why?
Yes, basically we are looking to, we have increased our risk level in our portfolios moderately. I won't say aggressively at this point. But looking into next year, we are becoming relatively more optimistic. And we have raised our rating for emerging market equities. That includes Asian equities looking into next year. Basically, we see that we are seeing positive policy actions from some of the major central banks in the world, whether it is in the ECB with the OMT operations, in the US with the QE3, as well as more recent positive developments on handling the fiscal cliff situation. In Japan, we are seeing potentially more liquidity injections, as well as potential some more easing measures in Japan. And even in China, the recent leadership transition has finished, and it is within market expectations. So that has also removed some of the concerns on the markets. So net, looking forward, a lot of these macro risks that people have been worrying about earlier this year is now much lower. And we do see that the tail risk for the market has significantly reduced, especially in Europe for a breakdown of the euro. That has been significantly reduced. So we are turning somewhat more optimistic for next year.
The ASEAN nations are picking up fast and they're narrowing the gap with China. How do you allocate your portfolio within the Asian equity space?
Well, yeah, I think in terms of the growth in the ASEAN countries, for example, that has already been pretty much discounted by their markets. While for countries like China, basically people have been having a very have been lowering their expectations for the growth in China, and there has been a lot of concerns on China, and that is also reflected in the equity markets, which is trading at a much lower valuations than those in the ASEAN countries. So whether the markets will perform or not is actually dependent on the whether they are able to beat investor expectations. So while so much expectations have been built in ASEAN and so low expectations in China, there's the chance of a reversal could happen. And at the same time, it's not just about allocating among the countries. Looking into next year, as I said, it will remain a low growth environment. For stocks that are able to deliver growth in such an environment, they will continue to be highly valued by investors. And our statistics have shown us that the stock correlation across the Asian markets have significantly reduced, meaning stock performance will be more divergent between the different stocks. Those that are able to deliver growth or that are able to surprise the market on their growth would perform better than those that are not able to do so. So it's pretty much a very stock selective environment looking into next year.